Well, after the 4% slip yesterday, L&T Infotech is reacting positively to its numbers given the fact it managed to beat the street estimates. The revenue growth in terms of rupee terms came in at 5% versus the street expectation of 4.5%. The dollar revenue growth was bang in line with expectation at $580 million. Separately, if you look at the constant currency growth, it came in at 2.9% on a sequential basis, and this compares with our expectation of a growth anywhere between 2.5% to 3%. The biggest surprise actually was on the margin front, because yes, there has been a decline of 130 basis points, but the street was bracing itself for a bigger decline anywhere between 150 to 250 basis points, and the reason was that this quarter was likely to see the impact of wage inflation. Now, we asked the management whether there was any one-off that really supported the margin profile this time around, and they told us that while the wage inflation was in line with their expectation, the currency tailwind is something that really supported margins this time around, and apart from that, there was no particular one-off. On the bottom line, the figure came in at 634 crores, and that compared to our expectation of just 565 crores, so there's a big beat coming on the bottom line as well. The other positive news was that attrition has come off a tad bit. It came in at 23.8% as compared to 24% last quarter, and the deal win momentum continues to be very strong at around $80 million. In fact, the management told us that the deal pipeline has actually improved, and it now stands at $2.1 billion, and they are expecting further closure of deals in the coming quarter, and that is why the street is believing that Q2 is likely to be strong, but it's only beyond that number that we'll watch out for of how the revenue visibility is, because in a conversation with the management, they did point out that there has been some advancement of orders into CY22 because the companies are looking at quickly completing their orders, but in calendar year 23 there might be a bit of sluggishness in demand, and they might see flat client budgets. So that is something that we'll have to watch out for. Overall, the brokerage commentary continues to be positive, and the stock has reacted positively.